Good morning, everybody. Hey, welcome to this Thursday, the 6th of June. I hope your summer is going well. The markets, we'll talk about that and more when Dave joins us here in just a few seconds. Hang tight, and he will be right here.
That was when I ruled the world. Light FM Coldplay there. Morning, Dave here. Hi. I really appreciate you joining me. I've been doing this thing for over 20 years, and I appreciate everybody hanging with me that long. Well, some of you have. It's 18 now before 9. Speaking of people that have hung with me for years, it's time to check in on your money, and Phillip Statler from Statler Financial Services in downtown Sebring is on the phone. And Phillip, it's about dang time something responded the way I expected to. Soft employment report yesterday. I was saying this ought to be one of those pictures of bad news is good news. I expected the market to go up, but they didn't respond right away yesterday. Boy, we ended up going up, didn't we?
We did, man. I tell you, we hit some new record highs. I think the S&P 500, I think the NASDAQ was also a record high yesterday's close.
Yeah, I think everything hit a new record high except for the Dow, which has a little bit farther to go for it, but still everything was up. I mean, the Dow was up $96 last week or yesterday. Standard and Poor's up 1.18%, up almost $63 to a new record. NASDAQ up better part of 2%, up 331, sets a new closing record for the index, and boy, everything's coming up roses. It looks great. About the only thing that's left to be an interest rate cut, right?
That's right. And it looks like some people around the world are getting an interest rate cut. I'm not sure what we'll get next week. I'm really hoping we don't cut interest rates. But the ECB announced first thing this morning that they have cut interest rates for the first time since all the COVID stuff hit. Early, I think it was yesterday, Canada lowered their interest rates. And then earlier this year, Sweden and Switzerland lowered their interest rates.
Well, offhand, that sounds like a little pressure on the Fed. For what it's worth, the European Central Bank cut, that was the first one since 2019. So, I mean, they've been one of the holdouts in terms of keeping a steady interest rate strategy, but now even they're cutting, and we have a Federal Reserve Federal Open Market Committee meeting starting on Tuesday of next week. And before we went on the air, I was kind of cynically giggling and saying, can you imagine what the Trump campaign's reaction will be if the Federal Reserve cuts interest rates in the middle of the presidential campaign?
Yeah, that would not bode well with them.
No, I think the opposition camp will be somewhat less than impressed. Our picture of a slowing economy, as far as the employment front is concerned, continues this morning. The initial jobless claims report for last week, they had 219,000 claims last week. Your sources were expecting 220,000 this week. It's still a very healthy employment market, don't get me wrong, but 229,000 new first-time unemployment claims, that indicates that the employment market is slowing down again, and that should be, I would think, good news for equities. We're not heading into a recession by these indications, but at the very least, that overly hot employment market that we've had pretty much all year long appears to be slowing down to at least get into the neighborhood of normalcy again.
Well, yeah, I think you take that number and you take the JOLTS report on Tuesday, and it definitely indicates a slowing economy along with the ADP number on Wednesday. So I think we're seeing that slow down even in the employment numbers.
And that's getting back to normalcy. In other words, something close to an overall 4% unemployment rate. That's one of the two things that the Federal Reserve's been trying to do with their tighter money policy. So inflation's still the overriding number they're going to be looking at on Tuesday and Wednesday. But the other goal they had was to cool down the employment market just a little bit, and they're starting to see that indication. Now, it doesn't show such a cooling that they'll be justifying an interest rate cut, but at the very least, it does indicate they're doing the job. And with a little bit of luck, the thing we'll be watching most carefully, the comments that come out on Wednesday at 2:30, what the press release says, what the language is, saying things are sticky and we're still threatening to raise rates. If they don't say that, I'll consider good news.
Well, that's right. And we've talked about a lot of the Fed presidents and governors coming out and speaking towards actually raising rates, and not taking that off the table. So it will be interesting to see what the language is in that meeting.
Yeah, I'm going to assume the decision is hold steady, but boy, the language is going to be something we're going to parse every syllable on. Other data dump information that came out this morning. First thing, we came up with the productivity from the first quarter, the final reading on that. They decreased it from last month's estimate of 0.3% increase in productivity to 0.2%. Your guys thought that was a little bit more than they expected, wasn't it?
Well, yeah, I mean, mine says that they didn't expect any increase at all, and so that's I guess it depends on how you read it, whether that's good news or bad news.
Absolutely. The other thing we'll get a little later on today, we're going to get the Challenger job cut report later on this morning, and that'll be a topic of conversation before the official unemployment rate comes out tomorrow morning at 8:30. It's going to be a busy morning for chatterers like us tomorrow, isn't it?
It will be. It will be. The U.S. trade deficit also came out just a minute ago, a 1.5-year high.
Whoa.
On strong demand for import goods. Yeah.
Which kind of gives rise to the notion of Trump's desire to try to slap tariffs on everything that comes in at ports. Starts sounding almost appealing looking at that number, doesn't it?
Yeah, for a 1.5-year high, that's not good.
Absolutely. Other tidbits out this morning. Walmart announces they're going to start paying their hourly store workers bonuses for the first time. NVIDIA, one of the big rises on the NASDAQ exchange yesterday, is now officially worth more than $3 trillion. NVIDIA is now worth more than Apple. The world is upside down, Phillip.
Well, they do supply the chips, so it may they're the holder of the chip, and that's really driving a lot of things right now.
No, yeah, one of my tip sheet headlines says that if they keep going up today, they may very well become the most valuable publicly traded company in the USA, which is just a head shaker for a company we'd never heard of 3 years ago. Before we get to reports, a tidbit that I get a giggle out of. Remember we were talking about the little glitch that showed Berkshire Hathaway stock down 99.9% for about 10 minutes the other day?
Yeah.
Whole bunch of people put in buy orders. They got their buy orders at the regular price. A bunch of people thought they were buying a whole bunch of $4 stocks. They got their stocks at $410. I love karma. It just feels so good. Try to play a little bit of a crooked game and you get screwed 16 ways from Sunday. We do have some reports that are out there down the line. Five Below's got a location here in town. How did they do last quarter?
Well, this soft for the current quarter. I mean, that seems to be the deal. I think they did okay for the current quarter, but they are sliding significantly this morning because of their revenue expectations for the current quarter. They came in and said they expect to make $830 to $850 million, which sounds like a lot to me, but the expectation from the analysts is that they were supposed to come in like $883 million for the quarter. So I'm telling you, Dave, they are taking it on the chin this morning, down over 19%.
Yeah, I was going to say their expectations don't sound that bad, but I think their investors expected a miracle, didn't they?
Yeah, evidently they did. And we also had Lululemon. They reported and had an okay quarter. They topped the results. However, the company offered weaker second quarter guidance, as it still grapples with the United States, or not just the United States, the Americas as a whole. That market is just cooling off, and that's their largest market. I guess because of the results of the current quarter, it does have them bumped up this morning about 8.3%.
All right. Any other indications out there? You mentioned a couple of companies that, frankly, I hadn't heard of before we went on the air.
So there's two companies that you've probably not heard of. One of them I've dealt with them some. It's called Smartsheet. It's a workplace technology platform, and they had stronger than expected first quarter reports. They earned 32 cents a share versus 27 cents a share. Revenue was better than expected. They're getting a nice rally this morning, up 12.75%. And there's one more. I've never heard of this one. Sprinkler. I don't think it's a water business. It's a business technology stock, and they had weak guidance, and so they're getting creamed this morning, down 25%.
Maybe because everybody figured they were sprinklers and were in a drought. Oh, resetting the table this morning. It was a good day yesterday. I'm seeing a little bit of profit taking on my delayed quotes this morning, Phillip. 45 minutes early. What are we looking at?
Yeah, it's a little bit of a mixed bag this morning. Not much of a downward movement. We got the Dow down less than 0.1%. Same with the S&P 500. I mean, it's less than $2. The only green ink I see right now is the Nasdaq 100, and it's just barely green at $5. So a mixed bag at the open this morning. And then on the other side of the coin, we got silver pushed back over 30 this morning at $30.26 an ounce, up 0.6%. And then we've got gold flat right now. Crude oil heading up another 0.25% to $74.25 a barrel.
I'm not playing a big violin for them, though. It's $74. I'll even take a little bit of an increase once in a while. Just because it's at least lower. Overseas markets, the Asian Rim was a mixed bag. The mainland Chinese markets had another bad day, down by about 0.5%. Virtually everybody else was up, though, on the balance in the Asian Rim area. European stocks not looking too bad. Everything's up between 0.25% and 0.5%. Overall, European index up just about 0.5% halfway through their trading day. Getting a beat in a retirement that you can count on takes an expert pair of eyes. How do I find you to use your eyes to make sure I can afford to retire someday?
Dave, that's why I developed the core retirement design, to help people design that retirement, plan it out, know what they got coming in. Give us a call, 863-382-0037, to schedule your core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And a major data dump tomorrow morning, talking jobs and a whole pile more. I'll see you then, all right?
All right, man. You have a great day.
Thank you, sir. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Hey, everybody. I want to thank you for joining us today. Hope your week's going well. I look forward to closing out the week with you again tomorrow. Take care. See you then. Bye now.